Look at the after-hours share price. We're up almost 12 percentage points now. Joe, we've got to be bringing in Paul Sweeney as well to really... I mean, Paul, what do you think about these earnings results?
Well, you know, we've talked about pretty much every quarter. This stock is still very much driven almost exclusively by the subscriber numbers. And this quarter, we had a good beat on the subscribers, and the fourth quarter outlook is better than the street's expecting. So that's the primary driver here. That's in contrast to last quarter when they missed on the subscriber metric, and the stock was down about 14%. So
no, it's up the same amount.
Yeah, so it's crazy. It just shows you that no matter. People don't really focus on the revenue. They don't focus on the EPS. They're still focusing on the growth dynamics of this company as defined by the net subscriber adds.
So last quarter, everyone knows we got that bomb and the stock tanked and it was in the toilet for a long time. Amid this rise up
very graphic.
Netflix, I know, I'm trying to speak very technically. They have quarters like this from time to time, and then they just get reversed the next.
Yeah, we've seen this. This is actually a cycle. You know, every 4 or 5 quarters they will miss on their subscriber growth forecasts, and I think the bigger they get and the more international they get, it wouldn't surprise me to see their forecasts become a little bit more difficult to forecast some of these international markets that they've gone into where they have less experience. So that's kind of what they were talking about last quarter, and it's also driven by new programming. You know, the more new programming they announce in a quarter, or a great show comes back for another season, that tends to drive subscriber gains. Again, and primarily in the international markets, and this was a good quarter for programming.
Yeah, I've been spending a lot of time watching Money Heist, which is from Spain.
Your new favorite.
My new favorite. I've been telling Caroline. You know, when I look at Netflix's stock, though, down 15% since the last earnings report, since that terrible miss that Joe was just referencing. Do we go back to saying, okay, Netflix has beat once again, so forget what happened last quarter? Or did that second quarter miss really add some level of trepidation for investors where now they don't quite know that whether Netflix can deliver each time?
I think this quarter is going to put all the bad memories to rest, certainly for the bulls in the stock. I mean, I think, again, the company said last quarter, hey, we missed our forecast. We did a bad job forecasting. And again, I think some of the international exposure may make their forecasting a little bit more difficult. They came right back with a great number here in the third quarter, validated by fourth quarter guidance that was better than the street was expecting. So again, I think the stock, the bulls are going to have the way with the stock going forward here in the near term.
Peter, what does this mean for sort of tech in general right now? The fact that one of the poster childs of the second quarter, whatever quarter that was, sell-off last quarter is now out of the gate so strong.
Well, this is not unusual when investors look at things like subscriber growth. And when we're in bull markets, investors tend to care a lot less about things like cash flow and revenues and metrics that normal, mature companies tend to live and die by. So this is not at all surprising to me. And frankly, to me, as a market observer and a bigger picture guy, looking at whether or not Netflix has a beat or not is really kind of meaningless unless it tells me something about sentiment for the FANGs more broadly, for example. And the FANGs have underperformed year to date, and they were one of the first groups to roll over. And these risk proxy groups, the FANGs, EM stocks, commodities, crypto, all have started to roll over this year. I think what that signals is investors are paying attention to things other than subscriber growth and other metrics. They're not really based on the cash flow generation potential of a company.
It sounds like you're more worried than anything by people living and dying by Netflix.
I am, because if you live through a cycle or two like I have, which I'm sorry to say I have, this is what you see. This is not uncommon. When people care about metrics that are very high level and not about revenue or cash flow or earnings, it typically indicates excess.
Yeah.